If you've ever opened Binance Futures and felt overwhelmed by all the numbers, colors, and moving charts, then this video is for you. Today we're going to break down, step by step, exactly what you're looking at on this screen for the XRPUSD Coin-Margined Perpetual Contract. By the end of this video, you'll understand every section, every number, and how professional traders read this data to make decisions. So let's dive in. At the very top, we see the trading pair, XRPUSD CM-Perp. CM stands for coin-margined, which means your margin and profits are settled in XRP itself, not USDT. Perp means it's a perpetual contract, so it doesn't expire like traditional futures. Right next to it, we see the last traded price, which in this case is 3.2591 USD, and below it, the percentage change over the last 24 hours, showing the market is down by just over 1%. We also see three very important prices: the mark price, the index price, and the funding rate. The mark price is what Binance uses for liquidation and P&L calculations. The index price is the global average spot price from multiple exchanges, and the funding rate tells you whether longs or shorts will pay each other at the next funding interval. Here, funding is positive, which means longs will be paying shorts. The countdown shows exactly when the next funding payment happens. The large candlestick chart in the center is where most traders spend their time. We're currently on the daily time frame, which means each candle represents one full day of trading activity. Green candles show days where the price closed higher than it opened, while red candles show the opposite. At the top of the chart, you can see the open, high, low, and close prices for the selected day, along with the day's percentage change and amplitude, which measures how much the price moved from the day's low to its high. Overlaying the candles, we have three moving averages. The yellow line is the 7-day MA, the pink is the 25-day, and the purple is the 99-day. These help traders identify short-term, medium-term, and long-term trends. Below the chart, the colored bars represent trading volume, showing how much activity occurred each day. Looking at this specific chart, we can see a clear breakout from a consolidation phase near $2, followed by a strong bullish rally up toward 360. After peaking, the price retraced back toward the 25-day moving average before bouncing again. This structure tells us buyers are still active, but sellers are also defending higher levels. Volume spikes during the breakout confirm strong momentum. For traders, these moving averages act as dynamic support and resistance levels to watch. 2. The right of the chart, we have the order book. The red section at the top shows sell orders, also called asks, and the green section below shows buy orders, or bids. Each row shows the price, the size in contracts, and the cumulative sum of contracts at that price level. Here, one contract equals $10 in value. The darker areas in the background indicate where there's more liquidity. The current market price sits between the highest bid and lowest ask. Watching the order book helps traders gauge short-term supply and demand, as well as spot large orders that might act as support or resistance. Below the order book is the live trade history or tape. Green rows mean the trade was initiated by a buyer at the ask price, and red rows mean the trade was initiated by a seller at the bid price. The trade history gives you a real-time pulse of market activity, showing whether buyers or sellers are more aggressive at the moment. On the far right, we have the order entry panel. At the top, you can select leverage. In this case, it's set to 5x, and choose between cross-margin or isolated margin. Cross-margin uses your entire balance to maintain your positions, while isolated margin only uses the margin you set for that specific trade. The order type can be limit, market, or stop limit. For a limit order, you set your desired entry price manually, or click the BBO button to set the best bid or offer. You then choose your position size in contracts, remembering that one contract equals $10. You can also add a take profit or stop loss, set the order as reduce only, and choose the time in force, which here is GTC, good till canceled. When you're ready, clicking Buy Long opens a position expecting the price to rise, while Sell Short opens a position expecting the price to fall. When you enter a trade, the platform will show your liquidation price, which is the price at which Binance will close your position if your margin falls below the maintenance requirement. This is calculated using the mark price, not the last traded price, to prevent unfair liquidations during quick wicks or thin liquidity. For example, with 5x leverage, you only need to put up 20% of your position value as collateral, but that also means a smaller move against you can trigger liquidation. Since this is a perpetual contract, there's no expiry date. Instead, funding payments occur every few hours to keep the futures price aligned with the spot market. A positive funding rate means longs pay shorts, and a negative rate means shorts pay longs. This is important if you plan to hold a position for multiple funding intervals, because those payments can add up over time. So that's the complete breakdown of this Binance Futures trading screen. We've covered the trading pair details, the mark and index prices, the funding rate, how to read the candlestick chart and moving averages, how to interpret the order book and trade history, and exactly how to place an order. If you take the time to understand each of these elements, you'll be far better equipped to make informed trading decisions and manage your risk. Contract. The next time you open this page, you won't just see random numbers and colors. You'll see a full story of market movement, trader behavior, and opportunities waiting to be taken. Remember, the more you understand the tools in front of you, the better your chances of making smart, calculated moves instead of emotional ones. Trading isn't about guessing. It's about reading the data, forming a plan, and executing with discipline. If you found this breakdown helpful, make sure you leave a like, subscribe to Financial Freedom FX, and hit that bell icon so you don't miss any of our deep dive tutorials. I'll be posting more videos that cover strategies, risk management, and market psychology so you can level up your trading game step by step. Drop a comment below if you have any questions or if there's a specific market you want me to explain in detail next. Thanks for watching, trade smart, and I'll see you in the next video.